So, welcome to the new episode of Next Creators. Today we have Joel from Citadao. Nice to meet you.
Hi, Sasha. Hi, everyone. Thanks for having me on this podcast.
Yeah, thank you for coming. Maybe you can tell us what is Citadao?
Citadao is actually a permissionless, decentralized real estate platform. We leverage the DeFi efficiency to drive demand and unlock capital efficiency in real estate. So today's real estate is the kind of access, liquidity, and composability. Even though it is a 280 trillion market globally, around 50% of it, or around US 140 trillion, is locked. That means money that is not doing anything. It's not earning interest, not being invested, not being used to drive the economy. You buy a house for 1 million, you take a mortgage of 60%, that leaves you with 40% equity that is just stuck in real estate not doing anything. Our plan is to use DeFi to unlock that capital by improving accessibility, liquidity, and composability. Our platform will increase the number of use cases for the real estate token, and this in turn we believe will drive demand for the underlying real estate, increase capital efficiency, and enhance the overall fair value of the real estate universe. We foresee a future where there's going to be two real estate prices, one on-chain price, the other off-chain price. We believe the on-chain price with Citadel will always be higher than off-chain price because of increased and improved accessibility, liquidity, and composability. So real estate today is kind of a very traditional asset class that is ripe for disruption. And the team at Citadel believe the time for disruption is now, is today. All assets will ultimately be tokenized in the new world, just like how everything is securitized today. The technology is available today. There is sufficient liquidity on chain. The remaining limitations to bridge real estate mid-space with the blockchain is in one, the regulatory hurdle, two, the liquidity hurdle, both of which the team at Citadel have the solution to.
I see. And when did you get started overall in real estate?
So my journey in real estate started off back in 2008, 2009. I graduated after I graduated, I joined an investment bank as a graduate trainee. Thereafter, I kind of entered the real estate space with working with the largest developer as well as real estate consultancy in the world.
Got it. And where was it? Was it in Asia?
Mostly in Asia. So yeah, so I was in the institutional real estate space, kind of helping the institutions invest in real estate globally. So even though I'm based out of Asia, I kind of help them invest in real estate globally. And so it's the very traditional real estate private equity kind of stuff, like structuring real estate deals for institutions, feasibility study, so on and so forth. Over the past decade, I kind of built up my network and experience, and it was very rewarding because I learned that the value in real estate is not so much the land or building itself, but the community of people that develops it. And this is what the Citadel ethos is. It's about developing a community of people in real estate to increase the number of use cases for the real estate tokens that we will bring on chain.
Interesting, I see. And when you were working on real estate in a traditional space, were you focusing on commercial real estate or were you focusing on residential or some other types?
So I have a good mix of both. In the consultancy and in the banks and stuff, we're always looking at commercial real estate. Um, when it comes to developer, I have a chance to actually go into residential real estate. So my breadth of experience actually spread wide across all the different sectors.
Got it, I see. And what did you notice about real estate? You mentioned earlier in introduction that there is a lot of money locked and kind of don't do anything really. What are some of the other kinds of things you encountered while working for decade plus in a traditional real estate? What were some of the other kind of challenges?
So liquidity has always been a challenge. Finding the right kind of buyers or sellers, like kind of partnering them up takes a lot of time. On the developer side, when we are building projects to launch, the demand analysis has always been the most difficult because obviously understanding the type of demand, who the demand is, where they are from, uh, that kinds of ties in with terms of accessibility to real estate, which is another issue. Because real estate is such a bulky investment as a class, uh, it kind of limit the kind of participants in the real estate universe. It's not a matter of just um, uh, like introducing good quality real estate to the industry. It's about finding people who can afford it too. And over the years, I kind of find that besides this capital inefficiency part, the accessibility part has uh, real estate prices have gone up globally, like huge, especially in Asia. And that kind of lock out the millennial from the real estate market. Most of the younger generation is a matter of luck. Either you're born into a family that can afford it, or you live the rest of your life renting it. Our mission at Citadao is to change that and make real estate accessible for everyone.
Hmm. That's a really good mission. And how did you and when also encounter crypto for the first time?
So my crypto journey began back in 2017, where tokenization was all the hype, and everyone was launching real estate tokenizations project everywhere. By virtue of my position in the institutional real estate space, I kind of received many proposals by these real estate crypto projects to tokenize the real estate in our institutional portfolio. However, I was never able to convince myself then how it was possible for a real estate token to legitimately represent the rights to the underlying real estate. You see, in order to kind of say that you legitimately recognize and represent the rights to the underlying real estate, you need to be able to redeem the real estate token for the underlying real estate. And just like how we are able to redeem the USTC for the US dollar, none of the projects I spoke to then was able to give me a convincing answer and a legit answer as to how this can be done after they tokenize the real estate in our portfolio. This is a huge conundrum because then you have a whole bunch of real estate tokens. There is neither legal security nor tradable, and then it end up even more illiquid than the underlying real estate itself. Nonetheless, I was kind of very excited about the potential for tokenizing real estate. And what I did then, I gathered a bunch of legal professionals, guys whom I kind of got to know during my days working within the institutional space, and started brainstorming ways to legitimize this within the existing legal framework. It was towards the end of last year that we had this aha moment and realized the answer was right under our nose all this time. It was just that everybody was too busy following the herd mentality and looking to the left. Nobody kind of looked to the right. So by tweaking some of the structures that we come to know that the private equity guys use in the traditional world, we were able to connect the dots and link the real world mixed space up with the blockchain metaverse. So this structure, we are kind of convinced of our solution when one of the oldest and most respected law firm in Singapore with over 100 years of history agreed to issue a legal opinion validating our structure. We took this to the family office, who immediately agreed to back our project with over 200 million worth of quality real estate assets that they own both in the UK and Singapore. And that kind of sum up where I am today from the beginning of my crypto journey.
And I was wondering, so when you think about so then starting Citadel, when did you start?
So even though the team at Citadel, we kind of like got the team together proper and started deploying resources back in October 2020, which is like uh, late last year. The idea of the Citadel project started back in 2017. It's just that much time was spent analyzing the legal structure, looking at all the issues that the other projects face, trying to learn from it, and trying to gather a library of best practices that we can bring forward into our Citadao universe.
Hmm. And how did you start thinking from the start about your target user? Were you thinking about investors as target users, or real estate buyers, or somebody from the crypto ecosystem? Like, how do you think about target user, and how did this evolve from the beginning to now?
It started off me being the traditional world, looking at traditional buyers. Um, but then you realize that for most of these guys, they do have quite a number of alternatives, especially the wealthy ones. For those that are not able to afford it, there's nothing much we can really do in the traditional world. Uh, then the crypto market took off. Uh, there were many crypto kind of like OG guys who saw their portfolio went up significantly. But then we also found out that most of these crypto guys, mm, they would rather keep their assets in crypto that is more liquid, more efficient than go into the traditional real world. And recently, with the governments clamping down on crypto, like levying huge amount of taxes when you like exit your crypto position, it makes it even more unrealistic to actually sell the crypto, convert into fiat, get taxed a whole bunch of it, and then buy the underlying real estate. We saw a solution to bridge the gap by enabling crypto investors to diversify their portfolio of crypto assets into real world real estate assets that are income producing productive crypto assets without having to even go off chain in the first place.
Interesting. And when you started with those initial assets with this family office, so what are the assets you mentioned? There are a couple different geographies. There is UK, there is Singapore. Um, how would this work across different jurisdictions and different geographies?
So our structure is actually designed around the Commonwealth law. And because of that, in terms of geographies, we are going to launch our proof of concept in the initial stages of our project only within the Commonwealth countries that recognize and practice the Commonwealth law, because precedent cases holds persuasive, like kind of like um, uh, effect on other jurisdiction. It ties all the jurisdiction together under precedent cases. In terms of the assets, we do have a diversity of them, but we start off with prime commercial asset that are the assets that are income generating, uh, and because those are the safest. And along the way, once we clear the POC, which is to demonstrate that our structure really works and how it works, we'll move on to the beta stage, where we will branch out into a more diversified class of assets, including potentially one development project, and which will help us kind of uh, uh, kind of like see where the crypto investors, where the crypto community gravitate towards, and help us curate the right kind of real estate to bring on chain for the crypto community.
And how would you say the project evolved from the very beginning up until now? What was the core focus in the beginning? What were kind of like early milestones when you were starting late 2020 to right now, like roughly a year later? What's the core focus now?
The core focus at the beginning was to validate our structure, our legal structure, because that holds the key to whatever we are doing here. Uh, so we spent lots of time brainstorming the legal structure, trying to look at all kind of edge scenarios to make sure that we got all the scenarios capture, all the perspective capture, uh, and to try to get a law firm, a respectable law firm, to actually sign off on that and say that, hey, this structure actually works. Um, so that was the beginning. After we are armed with that kind of like validation, we were able to bring this to the uh, landlords, in this case, the family office, to secure the supply. Now that we have both the legal structure in place and the supply in place, moving forward, the key milestone is actually getting the platform out by the end of third quarter or early fourth quarter this year, and getting the proof of concept done. Now, the proof of concept is very important because since the 2017, 2018, as I mentioned, there are lots of tokenization projects out there. Uh, Tokenization was not a huge success, and there have been quite a bit of skepticism in the community. So our goal is to use the POC, the proof of concept, to demonstrate to everybody that we have the solution before we bring this to the wider audience in general.
Hmm. That makes sense. Would you be focusing on those initial couple assets coming from the family office, or would you start adding more to the platform? Like, is POC pretty much what you have already in terms of assets, or would you plan to add more assets relatively soon?
So our platform is a scalable platform uh, where we actually empower independent landlord with the ability to come onto the platform, list their property, and and tokenize the projects. The success of the success of the projects depend pretty much on the quality of the asset, the price that is offered to the community, and how attractive it is for the community to invest in. As long as there's a meeting of the minds between the landlord and the crypto community, the asset will go on chain. There is no gateway limiting the flow of assets uh, into our platform. So in terms of scalability, it's going to be pretty much decided by the community at large.
Got it. Hmm. And how do you think you're gonna grow the community? Will it be kind of organic? Like, do you have any thoughts about how you're gonna go about building the community on the crypto side?
So our project is a long-term project. We do have a 4 years vesting period for the team of tokenomics, and because of that, and that's pretty much longer than most of the other projects out there. Uh, and because of that, our objective is to ensure sustainability of the project. So in terms of growing the community, we're also looking at adopting the same model, the same ethos, where we want to grow a sustainable community that believe in the project. Therefore, we will be growing the community uh, at this early stage right now, pretty much via word of mouth, organic growth, uh, and more so to educate people about what we are doing than to raise money. And as we progress along the way, we believe, and we've seen successful projects like MakerDAO done it, that the product speaks for itself, and the community will naturally reach a tipping point where more believers than naysayers will kind of see the value of this project and join our community. So in a way, we are not so much the kind of like hype kind of project. We are more the kind of project that wants to get the product done properly. We let the community, let the product speaks for itself.
Hmm. And you also mentioned briefly about the skepticism around the previous tokenization attempts earlier, kind of in crypto history. Maybe you can comment a little bit on kind of competitive landscape, or even more interesting is like learnings from what have been tried.
Yeah, so that's a very good question. I mean, real estate tokenization, as we established, is not new. There have been many tokenization projects before Citadao. In fact, if you look at it, REITs, like real estate investment trusts, they have been securitizing real estate since 1960s. And if you ask me, that is probably one of the biggest competitor market out there. However, we have seen REITs having this principal agent misalignment because of the absurd amount of authority and like established at the REIT manager level. Because REIT do not allow for investment at the individual property level, and the REITs manager are incentivized based on the AUM of their portfolio because that's how their fees are paid. We have, even in a highly regulated and highly controlled environment as Singapore, seen pretty much a number of instances where the REIT manager will boost the AUM for fees at the expense of investors. Uh, the real estate tokenization projects in general, prior to Citadao, most of them face liquidity challenges. After you tokenize, there's no secondary market for the token, making it even harder for you to exit your real estate token. Uh, and because of that, they were not able to generate sufficient interest, sufficient yield to entice the crypto community. Because even stable coins are like generating double-digit APYs. And real estate, as you know, as an asset class by itself, typically if you can get anything above 10%, it's a pretty decent asset already. So that makes it very hard to form a use case for the real estate tokenization projects in general out there. We are going to be different from everyone else because we are the first and only platform out there that allow this thing called a two-way bridge, and it allows listed real estate not only to be listed on the platform and tokenized, but to be de-tokenized and redeemed. Now, this is very important for us because only by being able to redeem the token for the underlying real estate are we able to ensure legitimacy of the ownership. That's the stronger proof that the token you hold in your hand represents the right to the underlying real estate. And we believe we are the only project that allows that out there today in the market. Secondary and very important purpose serve, especially for DeFi project like us, where there's no centralized control, is this thing called natural valuation parity that will exist both on-chain and off-chain the moment we allow this to happen. Because if the value of the real estate token on-chain fall below the real world price, it falls below the off-chain price, an instant arbitrage opportunity will materialize, allowing investors, arbitrers, to come in, buy out the real estate on-chain, redeem it for the underlying real estate, and transact it off-chain to make profit. So that itself, we believe, is very important to ensuring a proper floor to the value of on-chain real estate price. We are also very scalable because we incentivize landlords to independently mint their own NFT and list their real estate on the platform, as I mentioned earlier. So this is unlike other projects in the past that are capital intensive because they must raise the money to purchase the underlying real estate before tokenizing them, resulting in most of the projects being constrained by capital and not being able to kind of scale. Our project is also very liquid. We utilize the AMM to provide 24/7 liquidity to ensure valuation transparency at all point of time. And last but not least, we devote a significant majority of our tokens to achieving and incentivizing platform-wide composability. The idea behind our project is to generate as many use cases as possible for real estate token. And we believe that this will ultimately create more attractive products, such as higher yielding real estate related leverage products. Uh, and we believe this will increasingly become more attractive as more institutional capital enter the DeFi space in search of quality productive assets. Uh, we believe that Citadao platform tokens as well as the real estate tokens can meet this demand. For example, when I say high yielding products, imagine if you have $100 and you invest this in a typical real estate tokenization project that guarantee a 5% rental yield. That's pretty decent rental yield for real estate, by the way. Most of the time, that's kind of boring. I mean, stable coins yield from they generate in excess of 20% APY all the way up to 60%. However, imagine what you can do if you can achieve a 95% leverage on that $100 worth of real estate token. Even if that 95% loan is 2%, the interest, you effectively have earned a 62% APY on the real estate token itself. Now you take that 95% USDC that you just took out of the real estate token, and you go and invest in let's say one of the more blue chip stablecoin farms out there, earning a 20% APY, effectively by holding real estate token and stablecoin, your $100 is generating APY of in excess of 80%. So as you can see here, in terms of the competitive landscape, our platform not only tokenize project, but we actually incentivize growth of the asset tokens on top of that. So the key takeaway is that Citadao, our platform, serves as a foundation for real estate DeFi. So anything done in the traditional world for real estate will be portable, and it can be made more powerful with DeFi. And that's our belief. So that's where we actually stand in terms of the competitive landscape and how we are different from all the projects out there.
Yeah, that's very helpful and thorough. I was wondering, how do you also think about incentives that you mentioned a couple times towards the people who will be providing the assets to the platform? Like, how do you is it related to your DAO? Like, is the part of incentives kind of like related to actual DAO? And how does it work? Maybe you can explain the incentives DAO, how they're related.
So the Citadao ecosystem actually consists of two sets of tokens. One is the underlying real estate token. The other is the Citadao platform governance token. Now, the platform governance token is special because it is designed to be to kind of grow the community. So there is no way you can actually buy the platform token. It has to be earned. It has to be mined, just like Bitcoin, Ethereum, right? And the way you mine it is to either provide liquidity to grow the community by building other DeFi related projects, or to actually, for the landlord cases, provide good quality real estate into the platform. This is how the incentive token is supposed to work. It's supposed to incentivize the community to grow the platform together. And the way to earn the incentive token, to mine the incentive token, is actually to purchase the real estate token. Now, the the advantage of actually owning the incentive token here is multifold. First, all real estate that is ultimately tokenized, listed on the platform, 2% of the real estate token minted will accrue towards the Citadel incentive token vault, which means that by virtue of holding the Citadel token, not only do you own 2% of all the real estate listed on the platform today, you will own 2% of all the real estate listed on the platform in the future, in the indefinite future. So as more and more real estate ultimately get listed onto the platform, the value of the Citadel token is expected to just keep going up, or rather the intrinsic value of it. By virtue of holding 2% of the real estate, you actually benefit from the underlying rental income generated by the real estate too. Above and beyond that, there's a whole bunch of value capture in terms of the Citadel incentive token, because as I mentioned earlier, the idea behind the Citadel token is to generate as many use cases as possible for the real estate token, and that means encouraging more DeFi projects built on the Citadel platform, leveraging on the real estate token structure that we have created there. This can be anything from reverse mortgage primitives to options, futures primitive, underwriting primitive, REITs, in a way, the indexes, a whole bunch of new world can be created on top of Citadel platform. And the Citadel platform will benefit in terms of a cut of all the revenue generated by all these primitives. That is how we tie all the primitives together with the underlying real estate token and the Citadao token. So if I were to draw parallel to the real world today, let's take a look at let's borrow the Apple ecosystem here. Now, the Apple ecosystem, we have this iPhone, which is a phone. The advantages of the iPhone is not in the phone itself, but all the apps on the App Store. Because the apps in the App Store generate the use cases that makes the phone more attractive than all the other competitor phones out there in the market.
Yeah, that makes a lot of sense.
Yeah, the more use case you have for the iPhone, the more attractive the phone becomes, the more demand there is for the phone. And the App Store takes a cut of all the revenue generated in the by the apps listed on the App Store. Now that's exactly what we are doing here. The Citadao platform is the App Store for real estate. The real estate token is the iPhone, and our objective is to build a community of other DeFi projects on the Citadao platform so that we can increase the number of use cases and demand for the underlying real estate token.
Got it. That's very helpful explanation. And what are some of the other use cases? You mentioned several of them. What are some of the other use cases you're envisioning that might happen with real estate tokens?
So the real estate tokens will probably be used to enjoy the benefits of the underlying real estate in general. But the primitives, as I mentioned, there's a whole wide variety of them. We have So if we were to break it down, the real estate itself into its element, we have the liquidity primitives, you have the utility primitives, and you have the economic primitives, as well as potentially the marketing primitives. So some of the use cases may be reverse mortgage services, real estate collateral pool, underwriting pool. That's for liquidity primitives. For the utility primitives, you can have everything from development rights all the way to asset management rights, co-working, co-living rights. And for the economic primitives, you can have things like syndicated private DAO that is listed on the real estate Citadel. You have real estate futures and options. You can have real estate index funds and ETF. And for the marketing primitives, basically marketing rights, brokerage rights to the underlying real estate. So if we break down real estate as an asset class, it's not just a building. There's a whole variety of rights that are tagged to the real estate that can by themselves be independent DeFi projects to enhance the value not just for the community but for the real estate token holders itself.
Got it. And where can people find more information about Citadel online?
Yeah, so for Citadao, we actually have a website. It's called Citadao.io. That is CITADAO.io. We are also active on Discord, so you can join us on our Discord channel. And yeah, so the link on the Discord group can be found on our Citadel website.
Got it. Well, sounds good. Thank you for coming today. That was a really good explanation.
Thanks everyone for joining our podcast. And as a show of our appreciation for listening in, we will also be airdropping 2,000 Citadel tokens to you after the token generation event. If you join our Discord group and mention Needs Creator on our general channel.
Sounds good. Thanks a lot.